And welcome. This is Mary Ellen McGonigal with your Friday afternoon MEM Edge show. As always, this is the show we're bringing to you where the action is in the broader markets. And first up, we're going to take a look at some of those more impactful headline news that drove price action. From there, we'll dig right in. Let's see where we closed for the week, and then sector rotation that is beginning to shape up. Also, we will take a look at those names that are faring the best and why. I'll share with you ways that you can get in front of these names so that you can take advantage of this new uptrend that's taking place in the broader markets. So first up, with the news items from last week, certainly most impactful was the fact that we did get core CPI, that's Consumer Price Index, numbers come in below estimates. Also, producer price numbers came in below estimates as well. That was fantastic news. Certainly on the interest rate or monetary policy front, a lot of investors now feeling that the Fed does have a good reason to pause their rate hike campaign. So in turn, we did see interest rates continue to pull back. We'll share with you what they look like currently and that impact that it had on the broader markets. We also got additional information on the economy. Retail sales did decline. And as always, news relative to a weaker economy is good news for the markets. That is meaning that this lower interest rate or rising interest rate environment has helped the economy pull back, hence inflation numbers lower. This is what the Fed wants. We also did see with those interest rates declining, mortgage rates did pull back and mortgage applications jumped by 23%. Big boost there for some of these home builders and other areas as well. Next week, it is a holiday shortened period. Pre-happy Thanksgiving to everyone. However, we will get some very interesting data by way of the notes for the Federal Reserve's latest meeting, so FOMC meeting notes. We are also going to get leading indicators, durable goods data, and then flash PMI data on Friday. The following week gets really quite interesting because we will get the GDP estimate and then also core PCE data, further inflation. Now, that's not, again, next week. That is the following week. But the point here is stay on your toes. For now, we do have that uptrend taking place. So let's go ahead and take a look at the S&P 500. And here we are. This is a daily price chart of the S&P 500. And you can see that the advance this week did keep this current uptrend in place. We can see that the RSI is in positive territory. It is peaking up here, getting close to overbought. So keeping an eye on that, but also the stochastics in positive territory, and then nice high volume on these rally days. So that near-term uptrend very much still in place. From here, we're going to take a look at some of these underlying sectors, the 11 sectors in the S&P 500, and I've added an RSI indicator, sorted it in descending order. This is to help get in front of where the relative strength is taking place in the markets. Again, all with an eye so that you can participate in that relative outperformance that is taking shape. So from here, up here at the forefront, technology. Now, the technology sector this week did underperform. So this standing up at the forefront is everything to do with last week. The tech sector was up 4.5%. We had a very focused rally the week before last. And then this week, more by way of digesting that big move. You can see technology is up here in that overbought position. We want to see this period of consolidation so that in essence, we can potentially set up for further upside. Let's take a look at the other areas up here at the forefront. And financials, they did outperform for the second week in a row, and pretty dramatic here with financials. I'll share with you a sub-industry group in financials that is faring the best, and then also a couple of stocks. Now, as we move through, I do want to share with you the top performing sub-industry or sector last week, and that was REITs, XLRE. XLRE up 4.5%. And we can see this downtrend reversal shaping up. This group does fare well when interest rates are declining. However, it was also the most highly shorted sector going into last week. So that was short covering taking place there, similar to other areas that were really had outsized moves, was short covering as individuals that were not constructive on the markets are coming to terms with this new uptrend. So as we move through, let's take a look at some of these other sectors here. This is communication services, had this gap up into a nice continuation rally. A lot of that having to do with Netflix, Meta, and certainly other names in that industry group. From here, let's go ahead and move on. We want to be aware of strength beyond those sectors. Really important that you can drill down. The relevance here is that if you get that sector and that industry group right, that is going to have a lot to do with getting into that correct stock. There is almost 50% of your stock's price movement is going to be relative to the industry group in the sector that it's a part of. So let's take a look at these underlying sectors or industry groups here. And we can see semiconductors up here at the forefront, nice 4% gain, earnings driven and news as well. So a nice continuation rally taking place there. One of the biggest moving groups, I talked about financials, and this was all about, in this case, we're looking at KRE. This is the regional banking ETF. You can see that gap up, and we closed above this key 200-day simple moving average. I did add 3 financial names to my MEM Edge suggested holdings list. So if you want to have access to that and lots of other highly impactful information, go ahead and use that link below, and you can trial my twice weekly report at a very nominal fee. Another area, big outperformance and downtrend reversal is IHI, and this is the medical devices ETF, up 6%. Nice double bottom formation. We're now up above this 50-day simple moving average. And this is an area that when it gets going, let's go ahead and pull up a monthly chart here of this ETF. And you'll see that it has had these really impressive periods of growth so that when the group does come back into favor, you can easily outperform the broader markets. Now, I did talk about interest rates pulling back. This is the yield on that 10-year Treasury. And you can see just the continued pullback this week, very constructive for the markets. We ended at about 4.4% for that yield. We want to keep those interest rates declining as a positive backdrop for the broader markets. One last area that is in the throes of reversing its downtrend, and that is the retail ETF XRT. We did have Home Depot and a number of other large retailers come out with their numbers last week. Not all of it was positive, but certainly it did give a boost to this retail grouping that is coming back into favor. From here, I did talk about that concept of downtrend reversals, and I want to share with you one of the easiest ways that you can get in front of some of these names. Let's go to StockCharts.com. We'll take a look at that initial interface page, and I want to share with you this item that you can actually put on your front page, and that is market movers. So from here, you can then ask for a particular index, and you want to see names that are up percentage-wise the most on that day. So what I'm going to do from here is take us back to this list from earlier in the week and how you can utilize this particular view and see if the stock has potential. So back here, I'm taking us back to that very same view, the S&P 500 top performers. And this is taking us back to Tuesday, actually Wednesday. And here we are. Again, this is what is by way of the biggest movers in the markets are these downtrend reversals. So let's go ahead and begin. Take a look at Target. They did come out with numbers ahead of estimates, this big gap up into a bit of a continuation rally. But a couple of things that would have me not so interested is the fact that we have this ominous downward trending 200-day, which could easily act as resistance. And then we have that RSI up here already in an overbought position, but certainly trending still upward. From here, we can take a look at some of these other names that actually fared beyond their initial gap up, and this is Etsy. We can see that the MACD now in positive territory. Nice positive RSI trending higher. And then the fact that the stock is having a nice continuation rally on high volume. Other names that we want to share with you that have been big winners in the past, and this is Ulta. I'm just going to pull up a Ulta Beauty. They are a cosmetic and otherwise beauty products retail company. And I do want to share with you that this is another company that has historical precedence of outperforming. This is a weekly chart, and you can see it's not quite ripe yet on that longer term view, but you want to have that in the back of your mind as this downtrend reversal continues to potentially shape up. Now, with that, you will want to be aware of names that were the biggest movers earlier this week, but did not have a continuation advance, and what to be on the lookout for. This is Bath and Body Works. We can see this downtrend reversal that was beginning to shape up, but very quickly gave way. So for my work, when looking for these potential downtrend reversals, we can look at Expedia, which was a big winner the prior week, and then again last week. A couple of factors that you're going to want to see to give you that confidence that it will continue higher, again, is that high volume. Here's that pivot move, that black line up through the red on that MACD, and then that nice bullish move on the RSI. So what we can see from here is a nice continuation rally in the sense that it kept that uptrend moving. We did not see a pullback. And then also equally important is these shorter term moving averages. And this is taking us back to this initial gap up, beginning to trend above the longer term. And that is called a golden cross. That is a bullish formation. And then from here, looking at another example of a name that is not really following through. And the point here is you don't have to purchase these downtrend reversals on day one. You will want to make sure that they have legs and potential for further upside. We'll take a look at some other names that have had that take shape. So here we are with a view of this gap up on volume, or the biggest movers in the S&P 500 on Tuesday. And again, that same concept. Is that downtrend reversal continuing, or is it finding resistance? Give that name a few days to retain a presence above that 50-day simple moving average, for instance, Home Depot, so that you know and have that confidence that it's not going to drift back into its prior downtrend. Caterpillar is a key example here. We are not into a true uptrend yet. That MACD is not quite up into positive territory, and we do still have a downward trending 50-day simple moving average that may act as resistance. And certainly comparing that to Salesforce, a well-known software stock that has a presence above each of these moving averages that is continuing higher, with these shorter term moving averages crossing above the longer term, indicating further potential upside ahead. Now, from here, I have one last segment that I was going to share with you, and that is the obvious comment that the uptrend in the markets is not going to continue each and every day. There will be days where pullbacks take place, such as this week. So how you can tell, should you buy that pullback? Now let's take a look at a company that came out with earnings earlier this week, gap down in response, not great numbers. For that alone, it would not be my first choice, but here for educational purposes, I want to point out when a stock pulls back. And on this bar, you can see that it did close the day in the upper reaches of its trading range indicating that it could, in fact, have further upside. So here we are on an intraday 15-minute chart, gap down on their earnings, and buyers coming in on that dip. It did continue to rally today, but it did fizzle a bit into the close. But that is one way that you can be on the lookout for stocks that pull back and could be viable on that pullback. Another name here, Lululemon, LULU. Here's a gap up. They were added to a large index. This is a pullback to this moving average, and take a look. You will want to see that RSI remaining in positive territory, likewise with the MACD, a nice rally, and then a pullback on Thursday to this upward trending 10-day simple moving average, very orderly pullback that could be bought. And that's it for this week. I hope everyone has a fantastic weekend and a wonderful holiday week. I'll look for you again here in 2 weeks. A long weekend.